$96,000. And I would think that that would be a lot of money for anybody, right? I mean, making almost 200 grand in 10, 15 minutes. No, I stuck around. And by the end of the day, I had not only lost the 196, I had lost another 60. And from that point on, I told myself that at one, size kills, and two, that when you meet your daily objective, even though they say that, you made a grand in the beginning of the day, turn off your screens, go ahead, go away, walk away. I used to believe that that was wrong. And Charlie D, actually, if you go into YouTube and you pull up the Charlie D tapes, he talks about traders that used to go into the bond pit and make a lot of money and then try to leave by 8:30 or 9 because the bonds would open at 7:20. And I remember in one particular class that he taught, there was a little guy, and I sometimes talk about this. There was a guy in the back of the class who came in late to the class and missed part of it. And he constantly was trying to get Charlie's attention, waving at him and trying to get a question in. And Charlie finally said, "Hey, what's up, Rob?" I think his name was Rob, as I recall. And Rob got up and he had his trading jacket on and his badge. And he said, "Well, Charlie, what do you think about a guy that comes in, tries to make $1,000 or $1,500 a day, makes it for the open and then leaves by 9 o'clock?" And I remember Charlie, he had these glasses on and he pointed his head down in front of a class of about 60 or 70 really, really great bond traders. And Charlie looked up and he said, "Well, Rob, I'll just tell you one thing. You're never going to be a millionaire." And I can remember that very clearly. And I thought to myself, that's right. You got to stick around all day. But that said, this is, like I said, this is an ever evolving game that I believe that the more you roll the dice, the more likely that, I'm not going to say for everybody, but I think that if you can get in, if you can get in there and you can make your $500 objective, or you can make your $1,000 objective, or your 2,500 or 5,000, depending on what you're there for, great. But back then, there was a thing in the S&P pit where a lot of guys like Mislow and a bunch of other traders that would be in there pretty much all day. They would trade the first hour, 2 hours. By 10:30 or 11, they'd walk out of the pit, and then they come back at 1 o'clock. And I think that was part of their success. They knew that trading into the middle of the day when the volumes dropped and there's no real flow, that it was a bad time to be in there. Now we all know that at some point around 11:30 or 11 o'clock or the European close is when the S&P tends to make a low. And if the S&P is good, it goes up in the latter parts of the day. So again, I think everything's evolved considerably over the last couple of years, especially with the amount of algorithmic and program trading that's going on. MrTopStep has been invited by the Chinese government to go with 4 traders from Bank of America who ran Bank of America's prop trading desk during the credit crisis. He's a very good friend of mine. I think you guys have heard me talk about him before. And Raj's book, he was the youngest prop trader ever on Wall Street. At 21 years old, or 21 and a half years old, Raj took over the BNP trading desk. And then from there, Raj had a couple other little jobs, but ended up being the head prop trader at Bank of America, like I said, during the credit crisis. And the funny thing is he was a terrific trader. He there was 15, 20 guys at his desk, and someone would yell out, "Hey, Raj, 250 million IBM, need a hedge." And Raj would he didn't have to calculate anything. He would say, "Okay, I got to do this much SPX options against it, or I got to do this much mini." He just knew off the top of his head. In 2007, he was still running the book, and I don't know exactly what time he quit. I think it was in 2000 and whenever the government pushed Bank of America over to Merrill Lynch. I can't remember. Does anybody remember that date? But anyways, at the time, Raj's book, and I've spoken to him about this, was up over $650 million. He had, at one point, he told me that he had over 100 to 150,000 mini S&Ps on. And that is something that I am in awe at. But then the other part about it is when all the new regulations came in, he opened up a desk at Nomura, the Japanese bank, and brought all his guys over. And I remember I was waiting and waiting and waiting for the business to start. I mean, because we used to do, during a rollover, we used to make 100 or 150 grand just off Raj. And as the book got smaller, we missed that business greatly. And then finally he got hooked up at Nomura. And I remember him talking to me on the phone, and the book got really big. We were the largest roller of the Russell on the trading floor. And at the time, we were doing Hall trading and we were doing Raj's business. And we used to do 30, 40,000 Russell rolls. It was unheard of. I mean, no one did that kind of business. And I remember when the credit crisis came, Hall Trading got bought by Goldman. And then the credit crisis came along. And I remember the broker coming up to me on the trading floor after giving him all this business for all these years. He's like, "Oh, you don't like me anymore, huh?" And I was thinking, what the fuck? Is that all you're thinking about? I mean, we're trying to get the business back. All you do is sit up in the Russell pit and wait for our orders, and you think I'm using other people now. And I got really upset about it. But anyways, after they finally got the desk going, we started doing the business again. And I remember it was about a year and a half or two after the desk had started really, really moving. And you can look up Raj. He's Raj Mahal. If you go into the internet right now and you look up Raj Mahal, it's not really that's his stage name. But he called me up one day, and it was about 1:00 in the afternoon. And he said, "Danny." And I said, "Raj?" And he's like, "Yeah, what?" And he's like, "I just quit Nomura." And I was like, "Oh, no." And I knew at the time there was no way to replace Raj. There really wasn't. And I said, "Raj, why would you do that? What would behoove you? Why would, after all this time, the credit crisis, your book being blown up, redoing the desk?" He said, "Look, you're the first person I called, and I'll explain to you why." He said, "With all the new regulations and all the new compliance stuff that's going on, I'm in and out of these meetings all the time. I'm a trader." He said, "And like Bank of America, Nomura was doing this to me all the time. When I was making big money, the head of the department would come up to me and say, 'Raj, why aren't you trading larger?' And then when they was losing money, the head of the department would come to him and say, 'Raj, why are you trading so big when you're losing?' And he said, between the regulations and between all the back and forth with my size and making and losing, I'm done." He just quit the business. And then he went on a comedy thing where he was doing comedy shows in New York. He's a very funny guy. I mean, he really is. He's about 6'4". He probably weighs less than 200 pounds. He's super intelligent, and I still am very, very good friends with him. In fact, he comes down to Delray during the winters, and he rents a house. And he just emailed me a couple of days ago about a house he's going to rent, and he asked me my opinion. But the other part about this, you guys, is that one of the things I've learned about, and it's really, really, really interesting, and I tried to say this to a couple friends the other day, or in fact, a couple nights ago. You guys know I'm very, very close with the pit bull, and the pit bull's an amazing, amazing trader. And it's not about bragging. It is, bragging would be someone that makes money and goes out and tells people how much he made a day or how much he made a month or how much he made that year or how we kicked ass here or there. But one of the really, really, really things that makes Marty Schwartz the pit bull different is his ability to take on size. And I was talking to one of the guys that we were at this table with, said something. He goes, "Oh, how's Marty? How's the pit bull?" The pit bull, about I think it was August 24th of 2015, when all that stuff was leading up to the China debacle on that Monday, where the Dow futures opened down 1,000 points. Leading up to that, the pit bull had opened up a futures and options account, with $30 million. 2 years, that account was $107 million. He did that all by himself. So for someone to say that you can't do it, you can do it. But the thing is that what happened was, on that Friday before the big down move, he hit me up on the ice chat, and I could show you everything that he wrote me on the ice chat, and I could show you everything that I said. It's an amazing, I pulled it up, I'm keeping it, I don't send it to him. But he hit me up, he said, the S&Ps had been weak throughout the week. They were talking about the China numbers on Sunday night. Everybody was freaked out, and he had 80,000 S&P options on. Not the little ones, the big ones. And he hit me up at about 10 o'clock in the morning, and he said, "I don't know what to do. I don't know. Come on, tell me. What do you think I should do?" And this is something that he depended on me for years and years and years, and still does. And I've always said, and somebody hit me up on Twitter and said something about me being old school. I don't pretend to be smarter than anybody. I don't. I got my education from the School of Hard Knocks on the trading floors, the Chicago Board of Trade, and the Chicago Mercantile. I wish I had gone to college. My brother went to Notre Dame. My dad went to Notre Dame. And one day, I think I've explained this many times, I was giving my dad a ride to work. And I got out of the car after parking the car into the parking lot. I walked toward the Board of Trade. He started walking across Van Buren Street. And I remember he was a big guy. He looked up and he had a suit on. He said, "Hey, D-boy, where are you going?" And I said, "I'm going to the Board of Trade." And he smiled at me. He said, "That's the greatest thing I've ever heard." And it really was, you guys, because at the time, a guy like me with no education would end up a plumber, and not that there's anything wrong with it, electrician, a politician, something, you know. But this was an opportunity for a street guy like me to go where the action was. And I remember walking on the trading floor, and I remember seeing these guys in the bean pit pushing each other and butting each other's chests together and screaming in each other's faces. And I thought, this is it. This is it. There's no doubt about it. And I started out as a runner making $65 a week. And by the end of my career, before the 1996, before the S&P Mini took over, I built the world's largest S&P index operation according to CME volume statistics. It's not something I just talk about. I don't just throw it out. And I know that a lot of my competitors on the floor used to probably laugh when I would say it. But I know. And people would say, "Well, how could you have built that?" I built it because I was a good sales guy. I knew that there was a need for a broker on the floor that didn't trade his own account. I mean, not during orders. What I would do if I was going to trade my own account, I would leave the main desk and I would go up into another desk about 30 or 40, 50 feet away from my desk, perched up on the top of the pit, and I would sit there and I would trade my 6 lots in and out, have nothing to do with the order flow. No, I mean, I could see the order flow, but nothing to do with the order flow on my desk. And I remember that, if you recall, there was something called dual trading back then. And we used to harp on dual trading. That was where the broker in the pit, if I had 500 big S&Ps to buy, and he could go in, he could buy 50 and then bid up the 500 lot or offer the 500 lot or whatever. And good for them, bad for the customer, right? Because the order fill really looking out for the best interest of the customer order or the desk that he does the business for, because he's making 50, 60 grand on a trade he just put on because I'm buying 500 or 1,000 or whatever that number is. And I remember when they banned that, and I was part of the people that pushed it and how much these brokers in the pit hated me for it. But you know what? At the end of the day, if that shit continued, the customers would not have come to my desk. And they knew when they picked up the phone that we were quoting the right market and that when the broker came out with a shitty fill that we were in there fighting for them. But last but not least, I want to talk real quick about the MrTopStep Collective. And I want to talk a little bit about what's transpired in our business. Now, a lot of people don't like talking about this, but there was thousands upon thousands upon thousands of retail accounts years ago. And these retail accounts weren't necessarily small, one lots and two lots. Some guys traded 50s and 100s. I mean, there was a lot of that around. But I think what's happened, and I always talk about this because I think being honest with yourself, knowing what you're up against, knowing how things work is so important to what's gone on. I think what happened was the introduction of program trading in the S&P was the beginning of it. The Pitbull used to say, this program trading is going to blow up the industry. He was going to take out $1 million ad in the Wall Street Journal condoning it or condemning it. And he told me back then that he traded the XMI and that the S&P would go the way of the XMI. And it has. As they hook up more electronic trading, more algorithmic trading, more program trading, more HFT, 70% of the daily volume that most of it, I mean, and when I was on the floor doing the UBS program business, program trading only accounted for 20% of the daily volume. Now this type of trading on certain days is over 70%. Some people say 80%, but I'll be kind and I'll say 70%. But that said, we're up against a lot of variables here. And when we started MrTopStep, we did it with one thing in mind, and that was to work with other like-minded traders. We call it a collective. And a lot of you guys know that WB, one of our favorite guys in our room, passed away, and there was turmoil in the room. And I went out and I tried my best to quell people and say, look, at the end of the day, I don't think WB would like to see any of this stuff. I think that he would say, get your act together, guys, and pull it together and get this stuff straightened out. And we have. And again, the reason I'm talking about how there was hundreds of thousands of accounts, they say Thinkorswim used to have 600,000 futures accounts. I'll bet you they have less than 100,000, and I'll bet that today, and I'll bet that 20,000 are active, maybe. And part of this has to do with algorithmic trading, but the other part has to do with the credit crisis. And I was always very clear about what I would talk about. That if during the credit crisis, if you couldn't pay your mortgage, you couldn't pay your electric bill, you couldn't pay your cell phone bill, it was very unlikely that you were throwing S&Ps around. And then along comes up MF Global and the crap that Corzine did, and I still to this day am just amazed at what transpired, how that all went down, that they would let a Goldman Sachs prop trader come into a small brokerage firm in Chicago, hire a bunch of prop traders, use customer seg funds to use that money to trade and then blow up. And I remember the day that I walked on the trading floor, I didn't know what was going on. There were hundreds of traders outside the trading floor. The CME had moved over to the Board of Trade. And as we went into the turnstiles, there was hundreds of traders in the lobby. And I remember looking over and I said, what the hell is going on here? MF Global went out of business. And I remember looking over and there was Charlie Carey, the head of the Board of Trade, standing outside the turnstile, not being allowed to go on the trading floor, being locked off the trading floor, the head of the Board of Trade. And I just couldn't believe it. And then we went through that crap. We went through the credit crisis. We went through the MF Global thing. And I'm telling you guys, the trading floor, you could hear a pen drop. I mean, for weeks, it took several years to get, the markets built back up from the credit crisis. The euro dollars used to do 1 million contracts a day. They went down to doing 100,000 contracts a day, even lower sometimes. And I remember looking over the trading floor going, holy shit, look what's happened to this stuff. Is it ever going to recover? And slowly but surely, more and more traders got positioned back with other firms. They left those firms without their money. I think they got most of it back. I don't know exactly. But a lot of those positions they had on were liquidated, and they lost money in the liquidation. Then they had to wait a year, a year or over a year and a half to get their money back. And I'm sure that some wives of traders just said, no way, you're not going back. So that really hurt the industry. It hurt the volume, and it hurt the industry as a whole. And again, there was a lot of retail out there, and there isn't as much today. But then things built back up. As things got back going again, it up at different firms, accounts opened up at different places, the business started to rebuild, and then bam, Russ Wassendorf and Company, PFG, steals over $200 million in customer seg funds. And I sat back at the desk and I looked at my partner Brian and I said, man, this is just going to kill the retail. We went from the credit crisis to MF, now to Russ Wassendorf, and then his attempted suicide. At the end of the day, traders, I think that we're up against a lot, but we're also people that love to trade. And I think at the end of the day, we like taking on risk. We like trying to make money. We like being involved in the markets. And now it's about staying alive, making a little money, getting in and getting out. And I'm going to do my introduction now. There was nothing prepared. That just comes right off the top of my head. But I want to thank everybody for coming in today. We're at the end of the webinar, we're going to what happened to Jack Bros. That's a very good question. Funny thing is, he accidentally got invited to one of our webinars back about 6 months ago, I think, and he emailed me and asked me to take him off the list. Look, and I'm not going to say anything bad about Jack. He's a good old guy. I think that he used to think that the trading floor and sitting next to the Goldman Sachs desk was really important. Kind of like what's his name from Thinkorswim on the Squawk Box, sitting up there in the S&P, Goldman selling 10, Goldman selling, Goldman, Merrill Lynch doing this, There was no volume in the S&P pit. There was 40, 50 guys that did, 10,000 a day. You're supplying flow that isn't happening. And I think Jack went that kind of way. I don't know if he's still down there. He probably is. But we have to be realistic about what is real and what's not real. And that's really an important part of trading. And one of the things that I think that we're good at MrTopStep, one, we're honest. We don't make winning trades every day. We make and we lose just like everybody else. And the idea is to limit those, to let those winners run and limit your losses. And at the end of the day, Jack is a good guy. We just couldn't really ever get a deal with him. We supported him. We believe that we brought a lot of customers to him, and he always told us we never brought any customers. So at a certain point, I just turned him off. I just looked at I looked at Bob in Chicago, and I said, that's the end of Jack, where we got nothing left to do with this guy. One of the things about MrTopStep, right, good, bad, or ugly, is we've got a big following. And at the end of the day, we've helped a lot of people push their products out there, and sometimes we're not recognized for it. So, at the end of the day, it is what it is. What are you going to do? You can't do much about it. But anyways, you guys, listen, I want to push this thing forward. Again, I want to thank everybody for coming in. And at the end of today's webinar, you're going to be invited into a new room, and it's called the Kronos room. What Marlin will talk about it. You're going to have access to it indefinitely. You will be able to be in this room for free. Our traders will come in and out. We've got a main room. You won't have access to the main room, but you will have access to the MiM for a full week. Now, Marlin Cobb is going to lead today's webinar off. He's a great guy. He's a former coder for NASA, and he actually hand-built our room. I love our room. It's got audio. It's got charts. We can have 1,000, 2,000 people in there, depending on how much server stuff he's got going. But he's retooling the room. And today he's going to be going over the MiM and how to use the MiM. And I believe he's got some new tools. I let him talk about it, because I'm going to be listening just like you guys are. And then after that, Niels Koops is going to come in, and he's going to be talking about his own proprietary charts on Investor RT. Now, that may not sound, everybody has their own stuff that they use, but at the end of the day, I have had my charts, basically my money maker. I've got several charts that I've got, but my money maker is the one that I read the most. And back about a week and a half ago, he started showing me his charts. I've known about his charts for a long time, and I've been switching over to his charts. And I'm going to ask him after the webinar to give me more of his charts, and they're great charts. He spent a lot of time on designing them, and I think when you guys get a look at this stuff, you're going to be happy that you came to the webinar. So in the end, we all know that trading's not easy. What MrTopStep offers is a collective of traders that really, really do work with each other. We're a collective. We're all like-minded guys. And again, I'm not going to bullshit. Is every trade a winner? Hell, if it was, I wouldn't be here. But that said, you guys, I want to thank everybody for coming in today. We had over 400 signups. We've got about 150 people online. It's a weekend, so what I'm going to do is I'm going to jump off. I'm going to let Marlin take over, and I want to wish everybody a really, really great weekend. We'll hope to see you in the new room on Monday. Okay, so take care, you guys, and happy trading.
Thank you, Danny. Okay, can anybody hear me, or can everybody hear me? Good morning, everybody. It's a beautiful sunny day here in southern Maine. Hope you guys are having a good day. I know, let's get to it, because summer up here in Maine is about 4 weeks long, and so I don't really want to spend one of my weekend days sitting in my dark trading room here. Do that. So, is the map down for everybody? You can close it to yourself. There's a close button on the left side of it. And let's get going. One of the things I want to invite, you're going to get an invitation here. There's this slide right here. And it's Kronos, Danny. Kronos is the god of time. A lot of people spell Kronos CH. We're going to spell it with an X because we like X's. So Kronos. So MrTopStep.com/Kronos. There's a registration page there, or there's a login page. If you've ever done a boot camp with us, if you've ever been a member before, just use the same login. If you haven't, go ahead, create a new account, and you can do the registration. And we're adding the new room Kronos, which will be open for free. We're going to do the MiM too. So I'm going to do my presentation kind of short on the MiM today, because the best thing to do, if you can, is to see it in action during the day, because you can't really get a feel for what's happening in the day. And I'm going to say the same thing for Niels and speak for Niels. Niels hopefully will be around all next week, and he'll be in the Kronos room, and he'll put up his charts, and you can watch his charts in real time and see how that works. So that's the first slide, and that's going to be the last slide too. So everybody know what market on close orders are, right? So I don't have to go over market on close orders. Anybody who has some trades equities can, on any reasonable platform, can put in market on close orders. That is an order for a particular symbol, a particular stock, that says you want the closing price. So those published closing prices is going to be the price that you get. Okay, and what's really great about that is when Goldman Sachs or anybody else, these big fund traders, put in market on close orders, it is fair. Everybody gets the same market on close orders. So, and I'm not going to be able to answer questions as I'm going. I get too distracted, and so please save your questions, or if you put them in there, maybe somebody else will answer them. But I'm going to ignore any chat that goes on while I'm speaking. So the close, how many times have we traded all day long only to have it all wiped out by the close? That last hour of mystery that happens. Let's talk a little bit about what's going on as far as the closing auction piece of that mystery. At 2 o'clock in the afternoon, these are all going to be Eastern Standard Times because it's the New York Stock Exchange, and the closing imbalance, our MiM, is NYSE only because that's the only exchange we have data access to. At 2 o'clock, the floor brokers, get a list of all these market on close orders and the summation of them for each symbol. And if there's too much on one side, it's too many people that want to sell IBM, IBM's going to have a sell imbalance. And that's true for all the different symbols. Okay, so they get those, and the purpose of them getting those is to go out and start finding some volume, find some if it's a sell, find some buyers, so that we can close the market balanced. Because that market's going to close balanced every single night. New York Stock Exchange is going to close at 4 p.m. There's not going to be any imbalance. Okay, that's part of the promise of the New York Stock Exchange is we will find the liquidity, and you can put your stocks in and out of this market just like an ATM. Okay, and we're going to find it. That doesn't mean that it's not going to affect the market price, and we'll talk about that. But there's no imbalance going into the next morning. All the market on close orders are filled. They're either filled with market on close orders, limit on close orders, or the second thing that will get filled. They'll push the price up and down to take the limit on close orders to fill the needs, and then whatever equity, whatever stuff they have in their back pockets, they'll balance out the market. On big days like on Friday yesterday, we had a huge imbalance, at $4 billion imbalance, and but that was well published. Okay, so everybody kind of knew it was a Russell rebalancing, so they're kind of harder to trade. I think what we've got coming is going to be some good MiM trades because we've got interest rates going up, and I think we're going to start seeing some rotation out of stocks, which will be bad for the stock market, and more into bonds. So I think we're going to start seeing some closing imbalances. Those are the best imbalances is when there's rebalancing, reallocation out of stocks into bonds or bonds into stocks, because the Russell rebalance really is stock for stock, right? You're just selling some other stock and buying some other stock and those kinds of things. But the bond rebalancing is really money coming out, money coming in kind of things. Okay, so 2 o'clock, the floor brokers are getting their sneak peek at how the market on balance orders are stacking up. We're getting that information fed to us from the floor. We assemble together and we try to get early indications of the imbalance and build an early indication model of what the imbalance is going on. That continues on really until about 3:45. Okay, at 3:45, if you know anything about market on close orders, and that's when they're sealed. So before 3:45, you can put them in, you can cancel them. At 3:45, they are cemented, and they are going to be part of the close. You can always go on the other side. So if you see at 3:45, IBM has a sell imbalance, and you really want to buy IBM, you can join the closing auction on the buy side and help pair off the imbalance, or help balance off the imbalance. So that happens at 3:45, and then it starts pairing off, and orders are coming in, and they're pairing the orders off. At 3:55, the D quotes, for some reason, this is a floor broker's privilege, can go in and do whatever they want. They can buy or they can sell into the imbalance. At 3:59.50, that's the last time. 10 seconds before the market closes, that's the last time market on close orders can be changed. And then in the last second or so, the orders are all matched, the closing price is published, and the market's balanced and closed. Okay, so that's a lot of words. Why is it important? Well, because a huge amount of stock trades during that time frame. It's a very liquidable part of the market. A lot of people use market on close orders. It is fairly statistically, it is fairly fair. And so if you just have a big block of stock you want to get in and get out of, and they're going to work for you instead of going to some other desk and having them try to trade you out of it all day long. The closing market on close orders tend to be fairly good. And so you'll see the amount of volume that trades at the end, and you see that big spike bar at the very end of the day. So a lot of times what happens is the market gets caught off guard with a large imbalance one way or the other. Equity's not around, right? So if you have a large buy imbalance, right, the net of all the stocks adds up to a large dollar buy imbalance. The only way to get sellers, because you're going to need sellers to balance that off, the only way you can get sellers is to raise the market, right? And then raising the market, of course, is, yeah, so that's what we're looking for, right? We're looking for that imbalance that causes the market to move. So I always trade with the MiM, okay? So if I see a large imbalance on this going to the buy side, that means there's a lot more buyers than sellers. I'm guessing that the market's going to go up, and I'm going to go and ride the MiM to the upside, opposite on the sell side. And we'll talk a little bit about some of those numbers. So this is what the day looks like in the trading room and what we look at on the charts here. Here is, I don't even know what day this was. This was a week or so ago. But you can see here at 2 o'clock in the afternoon, we've got a little bit of a sell imbalance. It starts to build up by, by 2:50 in the afternoon, 2:45. We're up to 200 on the buy side, right? So that's the early indications. So we're thinking, oh, you know what, this could be a good day going into the buy side. They're showing us early buys. And you can see right now at 2:50, the orders start coming in, more orders start coming. Now it's the sell side. Okay, and the market goes down. And what I look for on the MiM is a trend, and I like this trend, right? This trend is my friend because it's going and it continues to go all the way down, right? So again, the orders are preliminary orders, are suggestive orders, or fake orders. They're not real until 3:45, so people can pull their orders. They might have want to do a large sell, and the market's like way up, and so they want to take advantage of that, so they just do the sell in the open market and close the market on close orders. That happens. And sometimes they just hold their cards close to their vest and at the very end put in their particular orders. So you can see here where that big red line is at 340, that's the end of the kind of guessing game that we've been playing, and we're kind of doing a poll. We have, like, I think of the floor brokers like exit pollers, political exit pollers, kind of telling us, how it's looking. At 3:45, the real data comes in, the orders come in, and our kind of guessing data stream stops, and the real NYSE closing and balance stream begins. So at 3:45, we're getting real digital data from a real digital feed of what's happening. And you can see here on this particular day, we were minus 200 going into what we call the reveal. And when the reveal happens at 3:45, it ended up being closer to about minus 400. But that was okay because we had guessed on the downside, and that's where the downside is. Now you'll see at 3:55 what happens. Well, the D quotes come in, they buy it all right back again. So I don't know if they're trying to fake out by just putting a whole bunch of orders in, driving the sell imbalance down, and then just bought all their shares back again. But they pretty much just bought everything back that was back in the imbalance, and the imbalance ended up pretty close to zero before the end of the day. And yeah, we call this MiM flip sometimes, but that's a late MiM flip. So this is what I look at, okay? So again, the imbalance is on a per symbol basis, okay? And we aggregate all of these symbols up. We notationalize them, right? So whatever their share value is times the number of shares that's imbalanced, we create a dollar imbalance from that. And so the sum of the imbalances, so we create, this always is very confusing, we create a buy imbalance and a sell imbalance. The buy imbalances are all the stocks that have buy imbalances. Sell imbalances are all the stocks that have sell imbalances, right? And then the net of those, the difference between those is the imbalance of the imbalances, which is the total imbalance, okay? So that total imbalance, okay, so then there's a dollar bias, right? So you got buy dollars and sell dollars. So if the buy dollars are 2 to 1 more than the sell dollars, the sell imbalance, right? 2 to 1, that's 66%. That's a magical number for me. So if it's more than 2 to 1, that's a strong dollar bias. I like that. That's bullish to me. If the symbol is, and that is that we also go and take all the symbols and we count how many symbols have sell imbalances, how many symbols have, just take that number of symbols. If the number of symbols that have a buy imbalance is twice as big as the number of symbols that have sell imbalance, I like that on the buy side also, okay? So you just flip that around for the sell side, minus 66%. And if the total imbalance is greater than, although these are old rules for me because I've actually gone up to 300 now. If the total imbalance is greater than 300 million, we had 4 billion on yesterday. If it was greater than 300 million, I'm excited because I think that's enough to possibly move the market. And at 3 o'clock, if those rules are true, I'll put in a trade. At 3:20, I'll check again, and if it's growing, that is, it's more negative or more positive, and all of those three attributes, I will enter. And then at 3:20, at 3:30, I do my last based on the same rules. If I ever lose any of those biases, I just get out. And then I exit at the close, if it's a sell side, and then I'll exit before the 355 D quotes if it's on the buy side, because I don't trust those D quotes people. And these are my rules. I don't generally trade with a stop. People say you don't trade with a stop. I said, well, yeah, I'm going to stop at 350. I'm going to stop at the end of the day. But or if the signal goes away, those are my stops. It's a time stop. All right, so that's it for the MiM. So I know I didn't cover the MiM, and didn't before I go into the next thing. Let me just make sure. Now I'm looking at the text. So if you have any questions about the MiM and how the MiM works, ask them now. Again, I'm inviting you guys to sign up and trade all week with us. I'll be in that room all week long, and we'll cover in detail every move. And let me just tell you, there are people in that room that trade 10 times better than I trade using the MiM, and they're worth watching. Yeah, so I'm sorry. Yeah, so the MiM is actually biased towards the S&P 500. Okay, so we only have the NYSE stocks. All right, so we don't have Apple on the close. Evidently, we have it on the digital feed on the open, but we don't have it on the close. So we try to model as closely as we can. So we find the symbols which model the S&P the closest, which have had the best, and we rebalance our symbol list every quarter. So the ones that have the best correlation to how the S&P closes into the close, we give priority to. I don't watch the U.S. dollar. Come into the room and ask people if what else they look at. A lot of people, I tell you, the MiM like everybody, everything in the last couple months, the MiM struggles because there's just no volatility. I mean, the VIX is down to whatever 10 or so, and there just is no volatility, and nobody is really liquidating in the market. I mean, yesterday was a rebalance day. That was exciting to see 4 billion on and stuff, but that's annual. That happens every year. Nobody is liquidating the market, and nobody's just really coming in and buying the market. It's kind of in this Goldilocks mode of just a little too many buyers than sellers. So there's the link for the room, and if it doesn't work, give me some time. And if you're on Firefox, I just noticed that Firefox has an issue, and I'll have that fixed later today. Right, there's a lot of ETF. Yes. Absolutely, that affects the markets, and a lot of those ETFs and a lot of those funds are stock bond funds, so they get rebounds too. The 66 number is just my number because it's 2 to 1. Okay, so here's my thinking. My thinking is I've got these traders on the floor who are doing their best to keep us up with fresh data. They're awesome, right? We're subsampling the list, right? So we can't even call political election correctly. I want a lot of bias on my side. I want to see 2 to 1, one way or the other way. So it's just my way of thinking. I like trades that are 2 to 1. I like trades that are 66% profitable, and win 66% of the time. It's just kind of been my my trading room. ES, mostly, I think most of our traders are ES. I know one guy trades YM. So this is where the other traders did better than me, Joe, because what happened at the end of that $4 billion is it quickly got flipped. And as you saw yesterday in the market, you saw that close, right, where they just flipped up. So at 345, I ended up taking a loss of about two ticks on the trade that I entered 2 trades on the close yesterday. I was profitable for most of the time, and then the market just ripped up into the end. Okay, so all right, Tony, I'll have to help you later. So if you have issues signing in and signing up, email me and I'll get to you over the weekend here, because we'll make sure that everybody gets in this time. Okay, so let's stop the MiM. You got the open invitation. Come in and ask me all week long, and we'll see how it goes, and hopefully you get some trades in, and some good stuff will happen. But one of the things I have a problem with, I'm scattered. I got so many ideas, and I don't know how to do them all. There's so many MiM setups. We've got so much data, and I'm excited about the data. And I've always had this idea of building a scanner, basically a trade scanner, which is smart. It's not just price smart in a time series way of the SPX, but it's smart about where we are in the presidential cycle, where we are in the lunar cycle, where we are in the economic cycle, those kinds of things, right? So the days of the week, as well as technical indicators, right? So we've built this back end up, and we're only focusing on one symbol. We're only focusing on daily right now, okay? And the idea is, people always want to know, how did the stock market trade the day after a missed PPI number? How historically did that trade? We're going to be able to just type that in. You're going to be able to type that in and find out easily what the historical outcomes were for there, and if there was any trend to it one way or the other. So that's the idea about the Kronos scanner. Okay, and we've done some of the back end stuff, and we kind of need you guys to come in the Kronos room and help us build it out, and tell us which way you want to go, and help us put priority things. So there is a reason why we also doing the room free, and that's to debug our stuff and help us drive our development. So that's the Kronos scanner, and you'll see that we only have one thing built out so far on the Kronos scanner. This is the RSI panel. Right, so I think there's going to be like 25 different technical indicators on the SPX, RSI being the first one that we've done right now. So what you're seeing here is on June 22nd, the SPX closed at 2434.50. Okay, the 2-day RSI in this panel was 30.28, so that's where the 2-day RSI closed. 3-day was 40, 39.75. 5-day was 47.50. Blah 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 blah. So it's 2, 3, 5, 8, 13, 21. That's a pretty familiar sequence. And those are all stored along with the quotes. So you can see down on the bottom that SPX is closed at 30.28, and that number below it, that's 3. That's the plus or minus, right, to give a little bit of wiggle room to the RSI. So 401 times it's closed at 30.28, 588, 8, blah, 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 blah. It's closed at that. The webinar is being recorded. Okay, and then what comes back after the scan is a little heat map like this, which shows you the dates when the RSIs, the 2, 3, 5, 8, 13, 21 were set up exactly the same as they were on June 22nd. And what were the long-term outcomes? What were the outcomes on that? Well, it's pretty mixed here, right? You kind of expect that with a kind of mediocre RSI. So you look at, so Kronos looks at 2, 3, 5, 8, 13, 21 days out. For you swing traders to look for patterns here, right? And again, for me, I want to see a 2-to-1 kind of pattern, and I don't see anything there. I see 8 to 7, 9 to 6, 6 to 9, those kinds of things. So it's telling us that it's really a mixed bag. We can go up, go down. I think we kind of all know that. But we have been seeing some pretty strong things. We haven't had time to really trade with it yet, but which is another thing we want. We want eyes on the prize to see how it's doing. So that's the kind of results you're going to get at. So we haven't really put out all of the indicators. It's kind of easy to do. We've done all of the really hard work, and then we need you guys, like I said, to help us drive the finishing work on the scanner. And it's not just the scanner; it's the chat room that's built around it. There's alerts that come up. The MIM guys will be excited because there's a whole new MIM alert that comes up now. So if you're doing something else, it will pop up to let you know that the MIM's in a particular target range, so you don't have to be watching it all the time. Those kinds of things. So I'm done. I'm done for the day. I've used up a half an hour of your precious time, which I know is precious, and I just would like to use some more of your time next week. Come in, let us know what you think. Go to that website. Boy, that blue doesn't show very good on mine. I'll type it in here. https:// thank you, MTSJ. Are there certain days of the week that have better? So when I tell you, John, that there are things that, yes, there is an answer to that, but I really would like to have the real answer to it, down to 2 decimal points. And the thing that really drove me about Kronos, and also Kronos is going to be MIM smart, right? Because I don't know, like a $4 billion, when you get a $4 billion imbalance, how does the market tend to trade 2 days out, 3 days out, 5 days out, 8 days out? What are those kind of answers? So the MIM, I don't even know if that was on the slide, but the MIM is going to be part of the scanner too. So you can just type in those things and you can say, MIM on Tuesday, MIM on Wednesday, MIM on Thursday, and go through that and gather that data. Okay, so I'm done. Is there any questions? I know I talked fast. Link's not working. Okay. I have to go over to my development office to see what's going on. So you guys, when you guys registered, you all gave us your email address. So John, MTSJ, will be sending a copy of the video to you. So Marshall got it work. Can I just ask, Rich G, what browser are you using? Okay, I look at the, okay. If you can use Chrome, I know Chrome works. I haven't, Marshall T used Chrome. Okay, so I know there's an issue with Firefox right now. I'll get that fixed here in the next 10 minutes. So again, it's Marlin at MrTopStep.com. Send me an email if you didn't get in, and I'll make sure that you get in. I know Niels is waiting, and it is, I don't know, it's like 10 o'clock at night there. Niels, you in the wing? I'm still eating the food in the green room.
I'm here.
Hey, Niels, how you doing?
But it's only 6 p.m., so it's not too bad.
Yeah, I always get that time wrong. Okay, Niels, take it over, and good luck.
All right, yeah, thanks. Yeah, so just a little introduction, and thanks for having me, by the way, guys. Thanks for the invite. Yeah, so I've been trading for over 6 or 8 years now. Time flies. Started with penny stocks that didn't go that well. Moved to futures, which I really liked right away. Pretty good with math. So I started making my own stuff. Later on, I also now founded my own company where we made our own software. Yeah, so I just want to show you guys how to use InvestorRT and why I use InvestorRT. Danny also uses InvestorRT. I also set up his charts and all, which I think he likes, by the way. But RT is just a stable program. It runs really stable, which you need, of course, especially with fast markets. It's also very flexible. I guess you guys maybe still knew market delta. There was like an exact copy of IRT, but then without the footprint. So they changed to CQG, and well, I couldn't work with that anymore. So yeah, but it's also very user friendly. So you can change a lot of things, which I have done for you now, and I can show you. And have to share my screen. Hold on. Can you see my screen now? Is that working? Please a yes or a no. Yeah. Okay. Cool. So anyway, this is my setup for my laptop. I run a virtual machine over there for Windows. And this is kind of also the basic screens that I use to trade on. And I also use my trading domes on a separate server, which I open up on my trading computer, so they don't get minimize a little. Minimize what? The chart window. I have no idea how to do that. Oh, okay, yeah. Sorry, I'm always running on high resolution. I can probably make it smaller. 20. Maybe I can do this. Hold on. Is it better now? Should be better, right? This is like full HD. It's nothing more than that. Same. All right. Well, I'm not sure what I can do about that now. Actually, I can check real quick, but I don't think so. Yeah, sorry about it. I don't know. It's just working fine for me. Is it readable? Then I'll just go with it. Middle icon. Oh, you can use the scroll bar. Yeah, sure. Or you can watch it on the replay later. Okay, so I'll just okay, cool. Then I turn it back because I have it set at my resolution that works good for me. So anyway, these are my basic trading settings for one product for the ES. I basically have the same for any product, just copying them to another screen. You can see it. Wait, it's annoying. Anyway, so if you just start out with trading, you probably use a candlestick. I did too in the beginning, but that's just for me what it was the worst to use. But with InvestorT, you can add a lot of stuff. And I'm coming to my own software later, but I want to add some stuff that is available in IRT for everyone. It's called session prices and the flex levels. which I have set with the levels from FT71. You can import them for no problem. It's free. It's just, you can just add it. And just the RTH high, overnight high, initial balance high, the open, and yeah, to me it's very useful to just, I used to program all this stuff myself, and it got a bit messy. Now you just have one little add-on that adds it all. So yeah, you can use that. It's really handy. I have all this stuff available for you as well. You can just download the definition file, and I'll give you the link later for that. So you can just use it. Yeah. I also always add the VWAP. You probably know the V. Everyone knows what the VWAP is, right? Can it? Yeah, it can be used with any product, Maurice. Yeah, doesn't really matter. As long as you can run it on InvestorT, then it works here. So it depends on your data feed. I have DTN, which I have pretty much all products. Yeah, so candlesticks. Why I don't like it? The main reason I don't like it is just it's just showing the open, high, low, close with no volume, and to me volume is very important. So the first thing that I add is on the right is a profile from well, there are 3 profiles. So one is from, can you see the profiles, or do you have to scroll for that, or? Yeah, okay, cool. So the left one is the current day, the middle one is the previous day, and the back one, like the closest to the what's it called, the scale. I use different settings for that depending on how the market is moving. Usually I use like 5 or 10 days. Depending on the range of the market, like I want to see like where the market is trading, what they have traded, and where potential support and resistances, where LVNs are, HVNs. You do probably know what HVNs and LVNs are, right? Do I need to go through that real quick? LVNs, HVNs, high volume node, low volume node. Yeah, probably. Right. So depending on the range of the market, I just go with it with the setting here. If I think the last few days are or the last, so now we have like 1, 2, 3, 4, 5, 6 days, something in range. So I do want to see the days before that. In case it breaks lower, so you want to kind of see how they traded the volume below that price range from the, well, I guess this is 1 week. So you can see that right in your chart, and that's really helpful, at least for me. So I'm kind of building up my chart now. So now I'm gonna add is what I'm. Okay, hold on. It's the delta print. This goes below it. The delta print is showing no chart. It's still showing, right? I'm not sure now. Okay. All right. So anyway, what you see now is an overlay on the candlesticks, which I'm gonna move to invisible. So this is exactly the same as the as a candlestick, but then with more information in it. And the information what is in it is showing the volume on the bid and the volume on the ask. And maybe you're saying like, no, yeah, what does that matter? Well, it matters a lot, because when you see a lot of volume on the bid, that means there's an aggressive seller. But in the same time, you have a buyer. I mean, that's obvious, right? For every seller, you have a buyer. But the thing is, you want to see where aggression is. So you want to see who's winning and who's losing, and who's going to panic at some point and puke, and that makes the market move. And this example over here, you can see a flush down, and I just have here the swing sizes. It's 950. It's going down. So, but on the retrace, you can already see, and the profiles in it is just they're relative to a number. And actually, I'll show you that right now. So I have another option added to the delta print recently, where you can show the volume in the candle per price per side, and relative to a number, to whatever market you're trading. I have it at 5.5K now, and that means that now at this setting, every width of the bar, 100% is 5.5K. So for me, that's important because I work a lot with volume. So if you want to see how much is traded above and below it relative to that number, you can see that really clear, and that's what's happening here. At the retrace of 550, you can see it below, above it, it's just a low volume. It's just a push. There's nothing going on there. They're just selling it, and no one buys it. So at the level where it retraces, you can see in the down bar that there's where volume came in. So that retrace really makes a lot of sense, because that's where people got stuck, and that's where they want to get out. At least that's what I would do as well. So if I was long here, in this area somewhere, I could have thought it was a good buy, because it was at the VWAP, the volume weighted average price. Usually it's good for a bounce, because a lot of institutions trade on it, and a lot of algorithms are based on the VWAP. But in this case, it didn't. It just blew through it. But the retrace came right to that level, so that's really interesting. So yeah, so that's kind of how I use the delta print. I recently actually released a new indicator, this one, and that plots real-time support and resistance based on an algorithm I wrote. Unfortunately, I couldn't program it, so I have some programs that work for me. They did a really good job translating my idea into the zone decoder. Well, as you can see, the low over here was right at the bottom of the zone, and I actually went long here because of that. Because plus, it's not only that, of course. There's a lot of volume here at the low, so they caught it with 9K volume cells, 9.3, and that's pretty high for the S&P. So yeah, that's kind of like buyers stepping up and sellers kind of failing. They couldn't even like move it a point lower, and yeah, that's why the pullback happened. And I have probably plenty of other examples, and I always use charts and where I'm scrolling, because I don't want to use like perfect examples, or like, oh yeah, that anyone can make any example work. So I'm just gonna scroll here, and here's another one. So the direction will move up 6 points, and the retrace is a really common retrace in the ES is like 6 to 8 ticks, depending on volatility. And you can see here the volume just was only at the top, right? So it moved up with pretty low volume, but here they started buying and selling and really get some trading going on. So the retrace to that point, the lowest points was again, like they holded it. And that's really interesting, because you want to know where they're holding it and where people are offside. And obviously people that that sold it here weren't able to buy it back. So the only 46 contracts traded at the lowest point here. And since it moved higher, they got people to stop out. At least day traders, they have like fairly short stops. And that's why it moved higher again, and just keeping it going. Are there any questions, by the way, so far? Because I think I'm going pretty fast. Oh, that's good. I have probably plenty of more. examples, yeah, right here. So here you can see the orange zone is the zone decoder, our product. Didn't hold because the movement went also pretty quick. So it moved down, and then again we got the 6-tick retrace, like the market maker retrace, the kind of rebalancing, and another move down. But the retrace there, it did stop at the zone decoder, which was good for like another 2 points down. Yeah, sure, I can show them live. Yeah, I'll set it up on my server. Yeah, that's all right. Yeah. The name of this product, which one? I'm showing several. Everything in it is the numbers that you're seeing is the delta print. The orange zone that you're seeing is the zone decoder. The signals that you're seeing on the top right, that's under the radar. That's our algorithm. It shows buy and sell signals. That's about it. Yeah, there is also a pullback, but it doesn't run if there's no real-time data. So the pullback, generally, I can show you a little video. Can you see that? So right here. So the last bar is kind of like an in-depth view. Can you pause here? Yeah, sure, Danny. Yeah, I can do that. Yeah. At least a few days, sure. Yeah. So the pullback indicator, it only works when the market is open, actually, or with replay data, but I don't want to do that now. So I'm just going to play this video. It's only like for another 30 seconds, but you can see how the order flows. Oh, this went too quick. So it went right here. So now you can see how the market is trading, and the last bar is the pullback indicator that resets every new high and low. So when a high is made, it resets the count. So you can kind of get like like a really detailed view of what's happening in the bar. And I use that to fine tune my entries. I'll play it now. You can look. So now you see this. Yeah. Now you can see the order flow. Only buys, almost no sells. And that's where you see the turns forming. And they're not really clear when you just look at either a candlestick. You can also use this on a candlestick. You don't have to use the delta print, but even in the delta print, this is hard to see when you wanna enter on really like short-term entries. Yeah, I only day trade. Yeah. I like to sleep. I close everything. Yes. No, it's only available on RT, on Investor RT from Linsop. Yeah. Zigzag. Yeah, I bet. Yeah. All right. So for the rest, hold on. For the rest, I use the profiles on the right on a 60-minute bottom right. Can you see that? That's still in view, right? The bottom right with green profiles. Yes or no, please. Thank you. All right. So that's where I use my longer term levels on. So I kind of combine it all, and then a trigger. My trigger is the delta print with the pullback, but my longer term levels come from the profiles, and I look where people are stuck and where LVNs are and HVNs are, and I get my levels from that, which are really good. And it's just the thing is, this is all like market created data. I'm not making these up. It's not like an indicator. So you can all get this information and just do your homework with it, and it works really well. For the rest, I have Yeah, the pullback that I already told you. Are there any questions? I think I'm kind of through my stuff. And by the way, on all our products, there's a 14-day free trial. They do convert to a subscription, but you can cancel anytime before that. So, or just let me know if you want to cancel. Darren, let me read that. Can you see that? No, and that's for the reason. I don't want to shade the dominant side, because in the profiles you can already see the dominant side. And the thing is, the dominant side is kind of, because it's relative, like if you have 10 buys and 9 sells, it's going to show a buy imbalance, while just one difference. So with the profiles you're seeing in the delta print, you can see the exact difference of the delta, and you can see really well which side is dominant anyway. So I didn't program that in the delta print for a reason, because I don't think it's helpful. Yeah. This reward. No, I generally like do one-on-one risk reward. It doesn't sound that great, I guess, but it works for me. Because I'm right a lot, and not to sound like arrogant or something, but I just have a really a good line of winners. So I tend to use like a one-on-one risk reward. I risk like 2 points to get like 6 ticks, 2 points, 250. Kind of depends on volatility, of course. Volatility is high. I set my point stop to 3 points, and I want to get 5 or 6 back. But that kind of depends. I do scalp a lot. That's just my thing. But when volatility picks up, I tend to hold them longer, or at least try. Yeah, I can show my charts and talk about it a little bit. Yeah. Maybe you can set a day so I don't have to do it every day. No, I'm still executing it myself, Maurice. Yeah. I don't know. I like algorithms, and I like to translate my ideas into algos, but I still like to click myself. This is something, I don't know, probably never going to change. So. Yeah, sure. Yeah, sure. That's cool. Yeah. Yeah, I'm thinking I'm kind of through my stuff for now, at least. So yeah, there is some discounts. There are some discounts available on some of the slides. Let me. Yeah, for MrTopStep we have a 10% discount on all products actually. There's a coupon code. Well, it's MTS. Well, you see it on the slides, I guess. So that's not that hard. And we got a special deal on the lifetime licenses, and that's $400 off. The normal price for the Delta print, at least, is $13.99, and it's going for $9.99. It's got a different code though, MTS lifetime. So, and there's still a 14-day free trial. So, whatever you're gonna choose or not choose or whatever, you can still try it. What are the arrows there? The arrows are entries for me, and the dots are kind of like possible entries, or more like high probability turning points or scale out points. Depends on what you're doing. And they work. The algorithm actually that works on the S&P, Euro stocks, crude oil, and the Euro Bund. So the Bund, the German Bund. All right. I think we can wrap it up if there's not other questions, I guess. Well, if you get it now, you still have the 14-day free trial, which you can cancel at any time. So, yeah, yeah. On FE, yeah, it's available on the Eurostocks. Yes. But to get to your point, Darren, if you get the 14-day free trial now, you won't get charged until the 14 days pass. So you can cancel any day before that. So if you want to test it out. Cool. All right. Thanks, guys.
All right.
Have a great weekend.
Guys, thanks very much, Niels. And again, I think that when you come on live while the markets are moving, it will allow people to get a better look at it and be able to kind of point things out and the questions
Yeah.
easier to. Okay. Well, thanks a lot.
Yeah,
Listen,
sure.
I know your time is.
Oh, it's 6:22 p.m. now, so it's not that late.
All right, you going out tonight?
Yeah, probably, yeah.
Well, thanks for coming
Yeah,
in.
or drive a motorbike.
Yeah.
All right, thanks.
Thank
Talk
you.
soon.
All right, you guys, listen real quick. I wanted to kind of finish up the Marty Schwartz story. If you guys want to hear about it, people want to stick around for a couple minutes, and I'll tell you about it.